So today we'll start with the new chapter, that is new unit, that is unit 4 on bonus and rate issue. First of all, what does a bonus issue mean? So bonus issue means an issue of additional shares to existing shareholders free of cost in proportion to their existing holding, also called as capitalization of profit. So first of all, let's understand, break it up and understand what does that mean. So let's say Mr. A has 10,000 shares. Okay, what company does is now, let's say 10,000 shares is rupees 110 each, for example. Now what company does is, company says Mr. A that we are going to issue bonus shares. These bonus shares will be free of cost. That means you need not pay us any money for the bonus shares. You just, if you have the shares with you, if you have our shares, existing shares with you, you can get these shares free of cost, no cost to be incurred. And this is not an option given to you. This is mandatorily given to all the shareholders. Clear? This is not an option that you cannot like accept or reject the offer over here. Okay, once company announces a bonus, that means every shareholder who has company's existingly previously issued shares will get a share. Okay, now comes the ratio. Now the company says the issue of bonus will be 1:5. Now what do you mean by this 1:5? 1 over here means bonus share, and 5 over here means existing shares, existing shares. Okay, now comes the question, how to read this. So whenever the company says the bonus issue will be in the ratio of 1:5, that means for every 5 shares held, you will get one bonus share. For every 5 equity shares held by you, you will get one bonus share. That means how many shares will Mr. A get? Mr. A will get, if I have to say, Mr. A will get 10,000 into 1 by 5. That will be how much? 5 divided by 5 will be 2000, I guess. Yes. So 2000 bonus shares will be received by whom? Will be received by Mr. A. So what will his total holding be after the bonus issue? He would have had, he would have had 10,000 shares which were existing shares, plus he will get 2000, 2000 bonus shares. So totally he will have 12,000 equity shares with him. 12,000 equity shares with him. Clear? This is how we compute the number of bonus shares. So whenever the ratio says 1:5, that means whatever the number first you have is the number of bonus shares that will be issued to you in the future. And 5 signifies the existing number of shares that you have in your hand currently. How much number of shares you have, that much bonus shares will be issued depending on the ratio whatever the company declares. The ratio can be anything which the company declares. It might be 2:5 also. Now what does 2:5 mean? How many shares will be issued? 2 by 5. That will be around 4,000 equity shares, and the total number of shares will be 10,000 plus 4,000 bonus shares equals to 14,000 equity shares. Okay, all these shares will have same rights as these shares. Whatever rights were given to these 10,000 shares, same rights will be attached to those bonus shares also. And by the way, these bonus shares are free of cost. That means Mr. A need not pay any rupee for the shares. He will get all those shares free of cost. Now comes the question, why is the company issuing free shares? What might the reason be? The reason will be the share price. So sometimes what happens is, if you have seen MRF shares, right? MRF share currently is worth around 1.4 lakhs. For one share of MRF, you need to pay how much? 1.4 lakhs. That means company has to bring down the price so that more people can buy the shares. If the share price is 1.4 lakhs, how many people can buy at least one share? Very less people, right? But if the company breaks down this share into small chunks now of rupees 10 each, for example, it might be going around 500 rupees per share. So now if the shares price is 500 rupees, that means more and more people can buy the shares because the amount is really small for one single share, right? So because of that, companies sometimes go for bonus issue, because bonus issue once declared, since it is the free of cost, because of the averaging out, the share price decreases. For example, let's see. So 10,000 shares were bought for how much? Rupees 110, right? How much is the total value? 10,000 into 110 equals to 11 lakhs. Right now 2,000 bonus shares were issued at rupees what? At rupees 0. That means 0. Right now let's find out the new value of all the shares including the bonus shares. So total value of my holding is how much? 11 lakhs, because 11 lakhs for the existing value, For this it is 0 because I am not paying any money, right? Divided by what is the number of shares? What is the number of shares that I have in my hand now? 10,000 plus 2,000. So that would be how much? 12,000 shares equals to how much? 11 lakh divided by 12,000. That will be rupees 91.67 per share. That means because of the bonus issue, the price of the share has decreased from rupees 110 to what? To rupees 91.67. That means as the bonus shares increases, the value of the shares goes on decreasing. Clear? This is the one of the reason. Second reason is capitalization of its reserves. Now what do I mean by this? See, let me just draw up a balance sheet for you to better understand this concept. Okay, let me just draw up the balance sheet for you people. Liabilities, assets. Okay, we have share capital over here. Example, we have securities premium also. Okay, share capital is, let's say, worth rupees 10,000, and securities premium I have for rupees 5,000. Okay, from the previous issue, there was the shares were issued at premium, so I received some premium, and that has been classified as what? Securities premium in the balance sheet on the liability side. Okay, that means in the bank account, how much will I receive? I will receive the whole amount, that is 15,000. Clear till here? Okay. Now my balance sheet is tallying, right? 15,000 here, 15,000 over here. Now company wants to issue more bonus shares. Why? First example what you saw was to reduce the value of the shares in the market. Okay. Now what happens? Let's say company issues let's say 3,000 worth of shares. 3,000 worth of new bonus shares. This is my bonus shares. Okay. So what my share capital will be after the bonus issue? The share capital will increase to rupees 13,000. Share capital will increase to rupees 13,000. But if you see, will I receive anything in the bank? No. I won't receive anything in the bank. Why? Because we know that bonus shares are issued free of cost. That means from the shareholders I won't be receiving any money towards bonus shares. Whatever shares are being allotted by the company to the shareholders are free of cost. Okay, so then will my balance sheet tally? Check will my balance sheet tally. So on the debit side, sorry, on the asset side we have 15,000, but on the liability side we have 18,000. Is my balance sheet being tallied over here? No. That means from where am I getting funds to issue bonus? From where am I getting funds? Because see, bank account won't increase because nothing is being received. And over here, share capital should increase because once the bonus shares are issued, that means the company's capital has increased because of the new issue. Even though it is for a nil cost, still it is being issued, right? That means the people will have more shares in their hand now. So because of that, my share capital will increase. But from where the funds are being coming up? So these funds will be used from free reserves. Okay, securities premium. For the example sake, securities premium is also a part of what? Free reserves. So how much ever bonus is issued, that much value will be deducted from the securities premium, and the new value will be rupees 2,000. Clear? So because it was 15,000 before, 15k before, 3,000 worth of equity shares or bonus shares are issued. So because of that, the new balance will be how much? Sorry, 5,000. Okay. So 5,000 was the actual value of securities premium. Out of that, 3,000 value has been reduced to issue the bonus shares. So after the bonus shares, the value of capital is how much? 10,000 plus 3,000 new bonus shares, right? So because of that, the new capital is 13,000. So the securities premium has reduced to rupees 2,000. So now check if the balance sheet is tallying or not. The balance sheet is tallying. So that means I am transferring whatever was there in the securities premium or the free reserves to my share capital, and my balance sheet is being tallied. So what we do from where do we get the funds? The company may issue fully paid bonus shares to its shareholders out of what? Out of its free reserves, out of its securities premium, or capital redemption reserve account. Okay, we maintain something called as a CRR account. It is capital redemption reserve account. Okay, how will this be created? This part we will study in the redemption of preferences. Okay, because in redemption, while redeeming some preferences or while claiming back the money from the while paying back the money to the preference shareholders, we have to create a CRR account. Okay, that we will see in that particular chapter. But right now understand, whatever capital redemption account is created, from that also we can use the money to create the share capital or to issue the fully paid bonus shares. Clear? Okay. See, bonus shares cannot be issued at a lower price. Bonus shares also cannot be issued at a discount. It cannot be partly issued. Bonus shares are always fully issued. Clear? So that's why we call it as fully paid bonus shares. See, because if I issue partially, tomorrow will I receive any money for the bonus shares? No. So that means issue the whole shares. What is the issue? Clear? Okay. So now, bonus shares should not be issued out of revaluation reserves. That is reserves created from the valuation of asset. Okay. Let's look at some examples. Okay. First of all, I will show you the legal provision. As per section 2 subsection 43 of Companies Act, free reserves. See, as per this, it the fully paid bonus shares can be issued out of three parts. One is free reserves. One is securities premium, that we know from the previous chapter how securities premium account is created. Then we have capital redemption reserve account. So that means these two parts are clear to us because capital redemption reserve will be coming in the next chapter. Securities premium we have already seen how it is created. But coming to free reserves, now what is considered as a free reserve? In the company's balance sheet, what can be considered as a free reserve? Let's see. So, free reserves means such reserves which, as per the latest audited balance sheet of the company, are available for distribution as dividend. So, whatever profits you have in the or whatever reserves you have in the balance sheet, for declaring it as a dividend to the shareholders, that can be used as a that can be called as a free reserve, provided that. But what is the condition over here? That any amount representing unrealized gains, notional gains, or revaluation of assets, whether shown as a reserve or otherwise, okay, or so whatever unrealized gains you have, whatever notional gains you have, whatever revaluation reserves you have, shall not be treated as a free reserve. Clear? So if you have unrealized gain, notional gain, or any revaluation of assets, from the revaluation of assets, if you have earned any income, sorry, or any, you have created any reserves, in that case that reserve also cannot be treated as a free reserve. So that means that reserve cannot be used for issuing your bonus shares. Then any change in the carrying amount of the asset or liability recognized in equity, including surplus in the profit and loss of the measurement of asset or the liability of the fair value. So we have something called as fair value measurement, where let's say the value of asset is rupees 1 lakh. As per the fair value, we will increase the value of asset to rupees 1 lakh, 1 lakh 20, because this measure is given as per AS10. So if we are increasing this, whatever 20,000 rupees extra increase was there, that will be taken to what? To my reserves and surplus. So since it is taken to my reserves and surplus, that does not mean that I can use this towards my bonus issue. Clear? That cannot be used towards my bonus issue. Right? Remaining, except these things, everything can be used as a free reserve. Okay. So personal insight. So we can use capital reserve. Then we have securities premium. Then you can use the general reserve, whatever is there, and P&L account. Whatever profit and loss you have in the P&L account, that can be used. But revaluation reserve, if you have a revaluation reserve, this should not be used. This should not be used. Remember. Clear? Okay. Now, subsection 2 of section 63 provides that no company shall capitalize its profits or reserves for the purpose of issuing bonus shares under subsection 1 unless it is authorized by its articles. What articles? Newspaper article? No. By its AOA, articles of association. Clear? Then it has, on the recommendation of the board, has been authorized in the general meeting of the company. So basically through the general meeting, it has got the approval of the shareholders saying that we will be issuing bonus shares in so and so ratio. Please approve the same. Clear? Then it has not defaulted in the payment of interest or principal in respect of fixed deposits or debt securities issued by it. Whatever debentures it has issued, on that it has to make the payment. It should not have defaulted on any payments of principal or interest. If the interest or principal is pending to be paid, it is due and it is pending to be paid, in that case first pay off the dues and then issue the bonus. Without clearing of the dues, you cannot issue the bonuses. Clear? Okay. It has not defaulted in respect of payment of statutory dues of the employees, such as contribution to PF, gratuity or bonus. So if any PF is outstanding to be paid to the employees, any contribution towards gratuity, or any bonus which is due to the employees as per the law which was supposed to be given to the employees, if that is also due, in that case also you cannot issue any bonus until and unless you clear off those dues. Then the partly paid bonus shares, if any, outstanding at the date of allotment, are to be fully paid. Sorry, partly paid equity shares. Okay. So if there is an equity shares is partly paid, let's say you have called up for application, you have called up for allotment, and first call is made, but the final call is remaining to be made. In that case, you have to first call up the final call, and after that only you can issue the bonuses. So basically, if the shares are like this, 10,000 shares of rupees 10 each, 7 called up, rupees 7 called up. That means rupees 3 is yet to be pending. pending to be called up, right? So that means first you need to call this 3 rupees, first you need to call this 3 rupees, and after that once it is 10 rupees each share, that means you have received whole amount from a shareholder of rupees 10 each. If you have received whole amount of rupees 10 each, only then you can issue the bonus shares to these shareholders. Clear? Okay. Then it complies with such condition as may be prescribed. So in the future, if company law prescribes any more conditions, that conditions also need to be complied with. Okay. Then okay, now practical insight. There's a sequence of utilization of free reserve. So how do you use it? So first of all, use capital redemption reserve, then use securities premium. Why? Because these two, whatever CRR and securities premium you have, that can be used up only for the purpose of specific conditions. Five conditions we have seen in the previous chapter. Remember, under unit 2 we have seen while studying the securities premiums that only for 5 conditions. In that, one condition was issue of bonus shares. So because it has only limited purpose, these two have only limited purpose, we will issue the bonus shares first out of these reserves. Once these are empty, we will go to general reserve. Once general reserve is also empty, we will go to P&L account. Okay, but you can change these both, no issues. General reserves and P&L account you can change interchange, no issues, because see, this general reserve and P&L reserve can be used for anything. This can be used for anything. There are n number of purposes this can be used for, but these two cannot be used for everything, right? See, for example, this can be used towards dividend also. This can be used towards dividend, but these two cannot. No dividend should be paid through securities premium and CRR reserves. Okay, no dividend can be paid through CRR or securities premium. Because of that reason, I will utilize these both first, and after that I will go towards this. Or else what will happen? See, if you are using general reserves and P&L, this will be empty. Now tomorrow, if you want to issue dividends to the, if you want to declare a dividend, can you declare a dividend? No, because these both are empty now. Only these two are remaining. Can I issue dividend using these two? No. Because of that, use this first and then go for this. So what happens once this is empty? No issues. You have general reserves and profit and loss account to issue the dividend in the future days. Coming clear? Now comes the journal entry. Okay. So let's look at the question and do the journal entries together. Okay. Look at the question. Pass the journal entries in the following circumstances. A limited company with a subscribed capital of rupees 5 lakh, consisting of 50,000 equity shares of rupees 10 each, called up capital of rupees 7.5 per share. That means this is only 7.5 per share, right? What is the nominal value of share? Rupees 10 each. But how much is called up? Only 7.5. How much is pending? Rupees 2.5 per share is pending to be received, right? So a bonus of rupees 1,25,000 declared out of general reserves to be applied in making the existing shares fully paid up. That means whatever amount is there, they won't be calling it up again, but they will issue it through what? Through the general reserves itself. So the entry will be. So first of all, see, I am capitalizing my reserves to make this share fully paid up. That means rupees 2.5. Rupees 2.5 will be fully borne by the company's general reserves, and they won't be taking any money from the public. So the entry will be the first entry. See, since I am using the money through my reserves, that means my reserve balance will reduce, right? My reserves balance will reduce. Basically, what is happening over here is, as per this example, see, amount from securities premium was transferred to what? To my securities share capital, right? From my securities premium, the amount was transferred to the share capital. So securities premium value decreased, whereas share capital value was increased. So now here also I need to pass the entry to show this effect. So to show this effect. So general reserves, whenever general reserve decreases, will the entry be debited or credited? It will be debited. Why? Because general reserve is a part of the share capital. Remember I have told you before, general reserve is a part of share capital. Because of share capital, whenever share capital increases or decreases, whenever it decreases, the entry will be debited. So the entry will be general reserve account debited. To what? To we open a new account called as bonus to shareholders account. Bonus to shareholders account. Now what is the value of bonus given as per the question? Rupees 1,25,000. Rupees 1,25,000. Clear? Okay. Next what to do? So after this, pass a entry to show that the final call has been made. So what is the entry for making the final call? Share final call account debited. to share capital account. How much is the value? Rupees 1 lakh. 25,000 is pending to be called up. How do I know this? 50,000 equity shares as per the question. See, 50,000 equity shares into rupees 2.5. Rupees 2.5. Why rupees 2.5? Because 10 rupee was the nominal value of share minus 7.5 per share is already called up. So remaining amount is how much? 2.5. So this will give you how much? Rupees 1,25,000. Then after this, see, I have told you before that this account whatever you create should be cleared off, right? So how will you clear this off? By passing the entry of the credit to share final call account, rupees 1,25,000. To debit what? Debit what? See, this bonus to shareholders has been created. Why? This bonus to shareholders has been created. Why? Because I am supposed to give the money to the shareholders, right? So once this I have capitalized here, once I have capitalized over here by increasing the share capital, that means this bonus has been already given to the shareholders. So whenever I give the bonus to shareholders, the liability will reduce. Whenever the liability reduces, we will debit the account. Bonus to shareholders account rupees 1,25,000. Done. Then going ahead. The second question. A Limited having fully paid capital of rupees 50 lakh. Yes. Now we have made the capital fully paid up, consisting of equity shares of rupees 10 each, had a general reserve of rupees 9 lakh. Okay. It was resolved to capitalize 5 lakh out of general reserve by issuing 50,000 fully paid bonus shares of rupees 10 each to a shareholder to get one such share for every 10 shares held by him in the company. So first of all, tell me what is the existing number of shares? What is the existing number of shares? See, 50 lakh was the capital. 50 lakh rupees was the capital. For each share, how much value? Rupees 10. That means find out the number of equity shares. So 50 lakhs divided by rupees 10. That will be 5 lakh equity shares. Yes. Now what is the ratio of bonus? So a shareholder will get one such share for every 10 shares held by him in the company. So bonus has been given at what ratio? 1:10 ratio. That means how many bonus shares will be issued? 5 lakh into 1 by 10. That will be 50,000 bonus shares will be issued. For each share, how much is the value? For each bonus share, how much is the value? Rupees 10. How much is the total value of bonus then? Rupees 5 lakh. So do we have sufficient surplus? Do we have sufficient surplus with us or free reserves? Yes, because general reserve is at rupees 9 lakh. And how much do we need? We need only rupees 5 lakh. Clear? So for the worth of 5 lakh, we already have a reserve of rupees 9 lakh. Okay. And they have already told us to capitalize how much? 5 lakh rupees. But I just computed and showed you how to compute the actual value of bonus. Right? Okay. Now pass in journal entries. Okay. Again the same entries. So first of all, I am taking out some money from the general reserves. I am taking out some money from the general reserves. So general reserve account will be debited. So general reserve account will be debited. To what? To again open a new liability account called as bonus to shareholders. Bonus to shareholders. Since my liability is increasing towards the shareholders, the liability will increase and I will debit the account. So why is the liability increasing? Because I am supposed to give bonus shares. I have made a declaration that I will issue bonus shares, and I have transferred I have reduced the value of general reserves also. Now I need to pay off the bonus shares. I need to give it to the shareholders, right? Have I given it? No, not yet. So because of that, I am creating a liability. So that I should know that tomorrow I need to give bonus shares to the shareholders. Clear? Okay. Now what is the value of bonus shares? Rupees 5 lakh. We have computed it above. Next, after this part 2, issue of bonus shares. So whenever I issue bonus shares, the entry will be to equity share capital, because now I need to increase the value of share capital. I have told you right before also in this part. securities from the reserves, the balance will be transferred to what? To securities premium. Securities premium will increase, the share capital will increase and securities premium will decrease. So because of that I need to increase the value of share capital. So because of that I am crediting the share capital entry. Then after this, debit what? So once I increase the value of share capital, that means I have given the shares to the shareholders. So because of that, is this account or this liability account required now? No sir. So now what to do to clear this off? I will debit the account. Bonus to shareholders account, rupees 5 lakh. Now look at the next question. It is illustration number 4. Following notes pertain to balance sheet of Preet Limited as at 31st March 2022. Okay, they have given you the authorized capital, they have given you the issued and subscribed capital. In this subscribed capital, have a look. There were 12,000 preference shares at rupees 10 fully paid, and we also have 1,35,000 equity shares. But how much is paid up? So out of 10 rupees, only rupees 8 is paid up, right? Okay. Remember this. Can we issue bonus shares to these people? Can we issue bonus shares to these equity shareholders? No. Why? Because the whole amount is not yet received from them. So we need to make it fully paid up, and after that I can issue the equity shares. Clear? Okay. Then we have general reserves. In general reserves, we have reserves and surplus. In that we have general reserves, capital redemption reserve, securities premium, and profit and loss. So these main entries are there. Okay, let's see what to do. On 1st April 2022, the company has made final call at rupees 2 each. See, how much was supposed to be received? Rupees 2 was supposed to be received, so company is making the final call now on 1st of April of on 1,35,000 equity shares on these shares. The call money was received on 20th of April. Okay. Thereafter, the company decided to capitalize this reserve by way of bonus at the rate of 1 share for every 4 shares held. That means once the shares were fully paid up on this date, company is going for the bonus issue by capitalizing its profits. By capitalizing its reserves. So, what is the ratio of bonus? Bonus ratio is 1 share for every 4 shares held. So, 1:4 is the ratio of bonus. Now, show necessary journal entries in the books of company and prepare the extract of balance sheet as on 30th April 2022 after the bonus issue. So, we need to pass the journal entries and prepare the small balance sheet, extract for the balance sheet. Okay, let's start. So first of all, compute the number of bonus shares. Okay, before that, let's pass the entries for making the final call. Okay. Now tell me, in this case, am I receiving the money for the call or not? I am receiving the money for call because the company is making the final call now. In the previous question, the company was not making the final call, but the company was using the reserves to pay for the final call and was not asking any money from the public, right? But in this case, they have clearly mentioned that the call money was received on 20th of April. Clear? So now the entry will be first entry. Tell me. The first entry, whenever I make a call, the entry will be share final call account debited. 2. Equity share capital account, right? Because we have preference, so we will better mention equity share capital account. Amount. How much was supposed to be received? On 1,35,000 shares. 35,000 shares, how much is supposed to be received? Rupees 2. That would be 1,35,000 into 2. So rupees 2,70,000 was supposed to be received. Okay, but actually better do one thing. Mention the dates because dates are given as per the question, right? So when was the call made? On 1st of April 22. Then on what date was the money received? 20th of April 22. I have received the money, right? So because of that, bank account debited. 2. Share final call. See, these are all the same entries that was passed in second chapter. So second unit. So I won't be repeating it. The logics behind it. Final call account. How much is the amount? How much is received? 2,70,000 is received. Now I have passed this entry. That means whatever was partly paid up has been fully paid up now, right? How much will this increase to? 10,80,000 plus 80,000 plus how much? 2,70,000 equals to, this is 13,50,000 now. Clear? Okay. Anything else? Bank account is not given to us to increase it, so leave it. Then now We have issued a bonus share at the ratio of 1 is to 4, right? With a ratio of 1 is to 4. Now what to do? Now what to do? We need to issue bonus shares, right? So pass the entry. So see, in this case they are not given us the dates, so we'll just simply pass the entry for now for bonus. So capitalizing the reserve. Before this, we need to find out how many shares are issued, right? See, company's existing shares. Company's existing shares is how much rupees? 1,35,000 shares, right? Bonus is in the ratio of how much? 1 is to 4. That means bonus shares is equals to 1,35,000 into 1 by 4. So that would be 33,750. So 33,750 bonus shares are being issued by the company. Okay. So now, how much money do we need? Value of bonus. How much is it? 33,750 shares into rupees 10 each. So that would be 3,37,500. Right. So do we have enough sufficient reserves over here? So first, what to use? Out of all this, what to use first? We will use securities premium. So write down 37,500 plus. Then we will use CRR. So 60,000 next plus. Then what else? I can use general reserve. So plus 1,80,000. It is 2,77,500 for now. So next, what will we use? How much is required more? So minus. So whatever answer you get, minus 3,37,500. So 60,000 more is required. So where will I use this from? From P&L account. Okay. So or else you can use P&L first and then you can use general reserves also. Whatever is fine with you. Okay. So let's pass the entry now. So first we will use securities premium account debited. Then capital redemption reserve account debited. Then we used what? We used general reserve account debited. And then we used P&L account debit. To what? To what? To bonus to shareholders. Remember the entry we are passed before? Okay. How much is the bonus issued? 3 lakh. 3,37,500. 7,500. So, how much on securities premium? 37,500. So this is 0 now. CRR 60,000. This is also 0. Then from general reserves, 1,80,000 fully utilized. Then P&L account, how much did I use? Only 60,000. So what is the new balance over here? 2,40,000 is the new balance, right? Because only 60,000 has been used. If you want, you can confirm. If you want, you can confirm by adding all the debits. Will it be equals to credit? 37,500 plus 60,000 plus 1,80,000 plus 60,000 equals to 3,37,500. Done? Yes. So now issue the bonus shares. Whenever I issue the bonus shares to share capital, because the share capital balance will increase. So equity share capital, by the way, equity share capital account. Debit what? Debit bonus to shareholders to clear it off. See, please don't buy at the entries. Please understand the logic clearly, or else in examinations you will simply get confused. So we are done with this. So next step is to prepare what? Prepare the balance sheet extract. So the balance sheet extract will be in this way. Balance sheet of so and so company. Just mention in the brackets extract. So first we have what? Equity and liabilities. So my heading. We have in this, we have shareholders fund. Then in this we have share capital, then we have reserves and surplus. We have reserves and surplus. Okay, this is my note number 1, this is my note number 2. Now what to do? Now go back to the notes. So authorized capital won't change, but okay. One more thing over here. See, preference shares has not changed, right? Preference shares is as it is. So do not touch the authorized capital. See, what is authorized capital? What do you mean by authorized capital? It is the maximum amount of equity shares or preference shares, whatever it can be issued by the company. Now in my case, tell me the number of equity shares after the bonus issue. Tell me the number of equity shares after the bonus issue. So I had existing number of shares how much? Rupees 1,35,000. 1,35,000 plus how many bonus shares are issued? 33,750. So total shares after bonus issue is equals to 1,35,000 plus 33,750 equals to rupees 1,68,750. 1,68,750. What is the value at the rate of rupees 10 each? So what is the value in rupees? 16,87,500. Right, 16,87,500. But what is the authorized capital? What is the authorized capital that I have? Only of rupees 15 lakh. That means I am issuing more shares than my authorized capital. So what should I do? I should increase the value of authorized capital. So the new authorized capital will be how much? 1,68,750 equity shares of rupees 10 each. Sir, why rupees? Why 1,68,750? Because this is what is the new equity share issued. Right, so I am increasing my authorized capital up to that extent only. Clear? Okay. Now this will also change. This will also change to what? 16,87,500. Clear? Okay. Then after this, coming to this part. Now what has happened over here? See, this is remaining the same. There is no change in the preference share capital, so do not touch it. But whereas my equity shares, what has happened over here? Equity shares has changed to again 1,68,750. Yes, fully paid up rupees 10 each. So what is the total capital value then? 16,87,500. Now coming to my reserves, general reserve is 0. CRR becomes 0, securities premium is also 0, but whereas my profit and loss only 2,40,000 remains. So now if I come back over here, what is the total value of my shareholders fund? So capital, note number 1, this is my note number 1. If I have to write, this is my note number 1, this is my note number 2. Now tell me, what is the value of my total equity capital, my share capital? 16,87,500 plus 1,20,000. So 16,87,500 plus 1,20,000. That would be rupees 18,07,500. And what about my general reserves? It is only rupees 2,40,000, right? So this is 2,40,000 and this is 18,07,500. Done. Let us now start with a new topic, that is my rights issue. What is a right? Let's see. Rights issue is an issue of rights to a company's existing shareholder that entitles them to buy additional shares directly from the company in proportion to their existing holding within a fixed period of time. I will explain it to you what is this. Again, let's take Mr. A. Mr. A. He has 10,000 shares with him, 10,000 equity shares with him. Now, company wants to raise more funds. Company wants some money now. Okay. See, in case of bonus, company will not receive any money into its bank account. Yes, only the capitals or whatever the general reserves are there will be capitalized. But in case of right issue, company will issue shares at a discount. Let's say at rupees 110 again. Okay, this guy has shares of 10,000 shares of the company for rupees 110 per share. Now what has happened? Because of this, because of the shares already he had, company is asking him to buy more shares. but now at a discount rate. Why? Because this is the right share issued to the existing shareholders. Only those people can buy these shares now, right? So company says, company is issuing right shares now. Company is issuing something called as right. So what do you mean by right? This is the right to buy the new shares, right to buy the new shares or additional shares for given to the existing shareholders, the right given to the existing shareholders. So now this right says, we will give you the right shares in the ratio of 1:5. That means for every 5 shares held by you, we will give you one new right share. So how much right shares will this guy receive? He will receive 10,000 into 1 by 5 equals to 2,000 right shares. Clear with this? Now comes the question, what is the value of right? Rupees 80 per share. What is happening over here? See, this guy had bought a share for rupees 110. Let's say the market value is 120, for example. Now he is getting the share at rupees 80. Why is he getting it at rupees 80? Because he is the shareholder. He is the existing shareholder. Because of that, the company wants to raise money, and shareholder will also get the share at a discounted price. Discounted price not from the nominal value. Let's say nominal value of one share is rupees 10. See, company cannot issue any right shares below this value. But since the current market value of the share is rupees 110 or 120, company can issue shares below its market value but not at nominal value. Nominal value is the initial value. Once when the company was opened at for one share, how much was the value? Clear? This is the current market value. After so many years, the company goes on making profits. Because of these profits, the company shares value goes on increasing. You might have seen some stock market values of each company. As the stock market increases, the value of each company goes on increasing. So because of that, now the value of the shares has increased from rupees 10 to what? Rupees 110. 100 rupees gains people have made from the share of rupees 10. So now the company is issuing same shares at rupees 80. This is not below the nominal value but below the market value. Company can issue shares at a discount below the market value but not below the nominal value. Never it can issue except in case of employee stock options. Clear? Okay. So that rupees 80. So that means Mr. A can buy new shares at rupees 80. Actual value of the share is rupees 120 or 110 in the market now. Clear? So that means this guy is getting the same shares at a lower price. Now, it is a offer made to whom? To only the existing shareholders. Now, what and all options Mr. A has? What options Mr. A has? Mr. A has three options. What are those? One, he can accept the right shares and pay the money. So he can say to the company that give me the shares and I will pay you the money. So basically, what happens? He will get 2000 right shares at rupees 80 per share. Then he will pay the money, whatever the money was due to the company, and company will give the shares to the person. Done. Company got the money, the Mr. A got the shares. Then, what is the case number 2? What is the second option? Renounce the right to a third party for consideration. So here what happens? What do you mean by renounce? Renounce means he can give away his right of the shares to a third party. See, third parties cannot claim this offer. Why? Why? Because third party will not have any shares. Let us say there is Mr. B. Mr. B has 0 shares of the company. So will Mr. B get the option to buy the shares at rupees 80 now? Will Mr. B have the option to buy the shares at rupees 80? No. Why? Because this will be offered only to the people who already have the equity shares. But whereas Mr. B do not have any shares in his hand, right? So he will not have any offer. But let's say Mr. A do not want to buy the shares. So what will he do? He will renounce. He will forego his right of buying the shares in favor of Mr. B. He will say Mr. B that, okay, see, I am not buying these shares. Instead of that, you can buy this. Instead of this, you can buy. Now, Mr. B will get these shares at what rupees? At rupees 80. A share which is worth in the market for rupees 110, he is getting at rupees 80 at a discounted price, right? So today only if he buys and goes and sell it to the market, he can earn some profits on spot, right? On spot he can earn some profits. So now what happens? Now, will he give it at free? Will Mr. A give the shares out to Mr. B on a free basis? No. he will charge something. He will charge some amount from Mr. B. Okay, how to compute that I will tell you further. But he will take some money from B, Mr. A. Sorry, Mr. B will take some money from Mr. B for the shares which he has foregone, he will give it to him. Take and go. Mr. B will pay this to whom? To the company. Mr. B will pay this to the company. Why? Not to Mr. A, because Mr. A do not want the shares. Mr. A do not want the shares. He's telling you take away the rights. Whatever rights I had, I am giving the rights to you. That's it. This share will remain with Mr. A. This share won't go anywhere. Only he is giving up this rights shares to Mr. B. In favor of that, he is getting some money from Mr. B. In favor of these shares, he is getting some money from Mr. B. Clear? Okay. This is the second option he had. Third option is to reject the right shares. Company say no, I won't accept it, I won't renounce it, but I won't take it also. I will forego. Then the company will not get any money. Why? Because Mr. A is not subscribing for the shares. Simple as that. Clear? Okay. Now, in the right offering, the subscription price at which each share may be purchased is generally at the discount to the current market price. Rights are often transferable, allowing the holder to sell them in the open market. That means whatever shares are issued will be at a discount from the current market price, not from the nominal value, but from the current market price. Rights shares are often transferable, allowing the holder to sell them in the open market. As I told you, whatever rights he has, he can sell them in the open market to the people. People will pay him some money, and people also pay some money to the company. At the end of the day, whoever is buying the right shares from Mr. A will be at a profit. Why? Because he will be getting first of all the shares at a discount, and he will pay a small amount of money to Mr. A. Okay, if I add those both amount, that will not be equals to the market value. That means he is still at profit. He is getting those shares at a cheaper rate. Clear? Okay. Now, we need to find the value of a right. See, whatever right shares are given to you, it is assumed that it is already existing in the current holding you have. It's just that you are taking out. So basically, we are assuming that whatever 10,000 into 110, sorry, rupees 110 existing shares you had, in that shares only, in these shares only, there was a bifurcation. That 10,000 into some ABC value, rupees ABC, and out of this 2,000 equity shares are removed at rupees XYZ. Okay, these values I will tell you how to compute. These values I will tell you how to compute. Don't worry about this. Okay, so basically the value of the right will be equals to cum right value of shares. That means cumulative right of the shares. That means together the value of the shares minus excluding the value of right shares. That means I will get this value. So basically cumulative excluding the right share. What is the value of shares? What is the value of shares? And I will get the value of each right. Simple. Because if I add these both, I will get this. So basically, in short, this value is divided between these two parts. Yes. Okay. So now comes the question: how to find this value? How to find this value? See, we need to find value of right. For that, we need cum right value, because this will already be given to us. Cum right value, but we don't know the x right value. We don't know the x right value. So how to find this? There's a formula for that. I will explain this with the help of an example. Look at the illustration. So, a company offers new shares of rupees 100 each at a premium of 25% to the existing shareholders on 1-for-4 basis. Okay. The cum right market price of the share is 150. That means the current cumulative, including the rights, the value of the share is how much? The market price is how much? 150. Clear? Calculate the value of right. What should be the x right price of the market price of the share? Okay, let's see. So first of all, what is my cum right? What is the cumulative right share price of the share? It is rupees 150. Now I need to make a bifurcation out of this. I need to make some bifurcation out of this. Now look at the formula. See, now let's assume this guy, whoever it might be, he has 4 shares because the right ratio is 1:4. For every 4 shares, you will get one new right share, right? So he already has some shares at rupees 150. This is the market price. Come right into 4 shares. into 4 shares. This is the current value of his shares which he has held with him. Now for these 4 shares, one right share will be issued, right? And what is the price of what is the issue price of these each share? As per the question, these shares are issued at a premium of rupees, sorry, 25% premium. That would be on 100 rupees. So 100 rupees into 25% will be again 25 rupees. So the total value of right shares will be 125 rupees. Okay, I just like bifurcate and write this for you people. So one share into rupees 125. Okay. Divided by existing number of shares. How many shares does this have? 4 shares plus number of right shares. How many right shares did he receive? 1 share. So now compute the total value. So 150 into 4 will be 150 into 4 will be equals to 600 plus 1 into 125 will be again 125 divided by 4 plus 1 will be 5. So the total value will be 600 plus 125 divided by 5 equals to rupees 145. That means this is what my X right price. So that means rupees 145. That means after the right issue, by removing the value of right from this, by taking out the value of right from this, what is the excluding right value? Excluding right value is 145. That means tell me what is the value of right share? What is the value of right share? Value of right share is equals to rupees 5. That's it. That's it. Arey. Rupees 5. Got it. So basically 150 minus 145. The same the formula talks about. See, the value of right is equals to come right minus x right. Come right minus x right. Clear? One thing I wanted to tell you people over here. See, what is the value of holding before right side? So the value of holding after this will be 5 shares. Why? 4 existing shares plus what? Plus 1 right share. So into rupees. What is the new value after the right issue? Rupees 145. How much will that be? 5 into 145 equals to rupees 725. But we should also have a look at one more thing. That is less money paid for the right share. Money paid for right share. How much has been paid for the right share? How much was paid? For one share, it is rupees 125. Right? Rupees 125. I'll just rewrite it. Okay. Rupees 125. 125 negative. So how much is the net value? Rupees 600, which is equivalent to this part. Right? So before and after right share, his net worth or his worth of shares or worth of investment remains the same. Right? Clear? So the next question is from your test your knowledge or your practical questions. So from the following notes pertaining to the balance sheet of Mars Limited Company Limited as at 31st March 2022, authorized capital is given, issued or subscribed capital is given. Here it is fully paid up. Okay, so there is no issue for the preference shares, but equity shares only rupees 8 paid up. So 2 rupees is yet to be received from these equity shareholders. Then we have general reserves, we have redemption capital, we have securities premium, revaluation reserve, and P&L account. Can I use revaluation reserve? Can I use revaluation reserve to issue bonus shares? No. So do not use capital reserve. Sorry, revaluation reserve towards bonus issue. Okay. So let's see. On 1st of April 2022, the company has made a final call at rupees 2 each on 4 lakh equity shares. On these equity shares, it seems the call money was received by 25th of April. Okay. Thereafter, on 1st May 2022, the company decided to capitalize its reserve by way of bonus at the rate of 1 per share for every 4 shares held. So what is the bonus ratio? Bonus ratio is equals to 1:4. Okay, then shares held, it decided that there should be a minimum reduction in the free reserves. So that means there should be a minimum reduction in the free reserves. What is the free reserve? General reserve will be called as the free reserves. Remember, okay. So this has to be touched at the end. So first I will use 1, 2, 3, and then if anything else is extra is required, in that case only I will touch my general reserve. Clear? Okay. So the priority will be securities premium, capital reserve, P&L account, and then after that general reserve at the end. Yes, okay. Because the question clearly states there should be a minimum reduction in the free reserves. Yes. On 1st June 2022, the company issued right shares at the rate of 2 shares for every 5 shares held on the date at the issue price of rupees 12 per share. That means we have issued right shares at what ratio? 2 shares for every 5 shares held, right, at the rate of what? Rupees 12 per share. 12 per share. Then all the right shares were accepted by the existing shareholders and the money was duly received on 20th June 2022. Show the necessary journal entries in the books of the company for bonus and right issue. Okay. Bonus thing we have already seen, right? So I will just repeat the whole thing once again. So let's start. So when was the bonus issued? When was the bonus shares issued? So before bonus, what should I do? Before bonus, what should be done? This remember, this should be mailed fully paid up by issue of a final call. Huh? So on what date? On 1st of April. On 1st of April 2022. What has happened? Final call has been made, right? So share final call account debited to share capital or equity share capital for that sake. Equity share capital account. How much? How much is required? From 4 lakh equity shares, rupees 2 each, right? So 4 lakh shares into rupees 2, 4 to the 8, so 8 lakhs. So 8 lakh is to be received. Okay, next. On what date is the amount received? The call money was received on 25th of April. So 25th April 22. I have received it, the money in the bank account. Account debited. 2. 2 what? 2 share final call. We need to clear the account, remember. Account. How much? Rupees 8 lakhs. After this, again, what has happened next? Next, we have issued bonus shares in the ratio of what? 1:4. So now tell me how much is the bonus shares being issued. So existing, how much we had? Existing, we had 4 lakh equity shares. Remember, 4 lakh equity shares. So what is the bonus ratio? What is the bonus ratio? 1 is to 4. Yes, 1 is to 4. So bonus shares equals to 4 lakh into 1 by 4. That will be rupees. Sorry, 1 lakh bonus shares. Value of bonus shares will be equals to 1 lakh bonus shares into rupees 10. That is equals to 10 lakh. So 10 lakh worth of money is required towards bonus shares. Okay, let's start. So first we will start with what? The utilization of the reserves. Utilization of the reserves, right? So first we will start with securities premium. So on what it was the bonus issued, as I mentioned the date. On 1st of May the bonus was issued, right? So on 1st of May 22. First of all, securities premium account debited. Securities premium, it is a capital item, and whenever capital item reduces we will debit the account. Then we have CRR. Again, this is also a part of my reserves and surplus, which is a part of capital. So again, capital reduces, so debit. Then we had what? CRR, P&L account. Okay, till now we will see till over here. If anything else is there, let's see. So securities premium, how much? 2,75,000. 2,75,000. Then from CRR, how much is utilized? Full amount, 2,40,000, because 10 lakh is required. Remember, 10 lakh is required totally. So from CRR, 2,40,000. Then P&L account, how much is there? 16 lakh is there from P&L account. So we'll utilize the general reserve first. Okay, General reserves. See, as per the question, sorry, my bad. General reserves are not the free reserve, but the P&L account is a free reserve. Clear? So free reserves we can see at the end of the day, both are actually taken as what, free reserves only. Okay. So if you just interchange the orders also, there is no problem. But I am teaching you people as per the study module. Okay, clear? As per the study module, they have touched this first, and then they have touched this. Clear? So general reserve first we will take 1,60,000. 1,60,000, and at the end we will take P&L account. So let's see how much is required from P&L account. So 2,75,000 plus 2,40,000 plus 1,60,000 equals to 6,75,000. So minus 10 lakhs, because 10 lakh was required. So 3,25,000. To what? To bonus to shareholders. How much? 10 lakh. Now I need to give it back to the shareholders, right? So on what date? On the same date again, 1/5/22. Bonus to shareholders account debited. I'm reversing the old account to again capitalized. So to equity share capital. To equity share capital account. How much? Rupees 10 lakh. Done. Okay. Now tell me, what is the new equity share capital? The new equity share capital. How much is it? How much is it? So 4 lakh were the existing shares plus 1 lakh bonus shares. So how much is the new equity shares that has been issued? 5 lakh shares are issued. Yes, 5 lakh shares are issued at the rate of rupees 10 each. At the rate of rupees 10 each, right? Okay. Now after this, what has happened? On 1st of June, after the issue of bonus, what has happened? They have gone for rate issue at the ratio of what? 2:5. So find out the value of the rate shares. So rate shares ratio. How much is it? 2:5. 2:5, right? 2:5. That means for every 5 shares held, 2 shares will be given as a right share. So right shares equals to 5 lakh into 2 by 5 equals to how much? 5 2. So 2 lakh right shares are issued. 2 lakh right shares are issued. What is the value? Value of right shares is equals to 2 lakh into rupees 10. No, why? Because see, at what rate was it issued? At rupees 12 per share, right? So into rupees 12, that will be rupees, I think, 24 lakhs equals to 24 lakhs. Yes. So 24 lakhs worth of money is to be received from the shareholders who are subscribing. So as per the question, all the right shares were accepted by the existing shareholders, and the money was duly received on 20th of June. Remember? Okay. See, for issuing right shares, there is no entry. But while capitalizing and the money is received, the entry should be passed. What will the journal entry be? So whenever I receive money, so when is the money received? As per the question. So the money is received on 20th of June, right? So on 20th of June 22, I received money. Bank account debited. How much did I receive? As per my calculation, the value of right is how much? 24 lakhs. So I have received 24 lakhs. But now here comes the important part. See, since I have received 24 lakhs, what is the per share value? It is rupees 12. But what is the nominal value? The nominal value of share is rupees 10. See, as per the question, it is 10 rupees, right? As per the question, it is 10 rupees. So that means what? That means 2 rupees. Whatever I have charged extra is a premium. So bifurcate this entry into two parts now. Just like we used to do before. To share capital account or equity share capital account. To securities premium. This is worth rupees 10. This is worth rupees 2. Hmm. Now what can be done? Now what can be done? So simply, uh, how much of the rate shares issued? 2 lakh. 2 lakh rate shares were issued. So 2 lakh into 10 will be how much? 2 lakh into 10 will be 20 lakhs. And 2 lakh into 2 will be 4 lakh, I guess. Yes, 4 lakh. And we're done with the interest. Clear? See, if because this was issued at a premium rate, this was issued at a premium rate, I am taking it as a premium because each share is valued how much? Rupees 10, and the company is receiving 2 rupees extra on the nominal value, right? Because of that, this 2 rupees has been taken as a securities premium, whereas the remaining amount has been charged to the share capital. Remember the things we have learned in the unit number 2. Clear? Okay. So we are done with the bonus chapter. So basically all the questions are really easy. So have a look at it, and if you have any doubts, please ask it in the Telegram channel. Okay. Thank you.